would like Pepe to join your discussion. So you can carry on and point the questions in the right directions.
Thank you, Margaret. Thank you, Otaviano, for your invitation as well. Just a great opportunity to share this panel with you and just collaborate with you as a pleasure as always. And thank you to Global Initiatives and Solutions as well. The presentation, as always, is very comprehensive. Thank you, Otaviano, for that. If you think it makes sense, I can perhaps comment on some of the points you made, either by complementing or doubling down. Does that sound good? Wonderful. So I'll go in the order of your presentation. I think, first of all, the presentation once again is very comprehensive and covers a lot of ground. So I'm not going to repeat on too many of some of the points. So let me just pick up on some of those. First, I think on the issue of debt, it's something that we've been looking at. It's something that certainly a lot of emerging markets, developing countries should be keeping an eye on. I think perhaps a positive twist on that is we do see, for example, markets remaining open, the fact that the countries can actually produce a lot of issuance, be able to raise money through a market mechanism, that's a positive development. But of course, whether or not that is dollar denominated, whether that's raised in domestic markets, international markets, the level of indebtedness, fiscal discipline, different countries, I think, that deserves a deeper level of study, but certainly a quick comment I want to make there. And then in terms of labor markets, this is one area that we're seeing significant scarring. You're absolutely right in that we're seeing almost a two-speed recovery between, advanced economies and some of the more vulnerable developing countries when it comes to headline growth, but also certainly when it comes to labor markets. This is not to say that advanced economies, especially, for example, in the US, there isn't labor markets challenges, but of course, I think some of the other issues are more acute in emerging markets, and especially perhaps two additional comments to make on the EM side. One is, look at some of the structural challenges we see, whether that's come to formal versus informal employment in developing countries. In some regions, that's particularly high, even 40–50% of the economy, and whether or not the pandemic has had a negative or positive impact when it comes to formality in some countries. And that obviously has impact down the road for future labor market reforms and effectiveness of labor market policy. Certainly something that's want to highlight. And the second point perhaps I want to add is also looking even longer term. Beyond the employment issue itself is the matter of fact of learning losses. We see this in advanced economies and of course to a greater extent in some developing countries where school closures during the pandemic have really impacted students. And it's hard to foresee this not having some sort of knock-on effect longer term when it comes to longer term productivity, longer term income, future incomes and future earnings in countries in the region that we spend a lot of time studying, Otaviano, Latin America and the Caribbean. Some countries during the height of the pandemic had some of the longest lockdowns in the entire world, and a lot of students missed the entire academic year, and they had no access to adequate internet connection or digital tools to enable the remote learning. So that certainly will have an impact longer term. So that's something I would also like to highlight on the labor markets front. And then moving on to China, as you correctly pointed out, a lot of us are frantically reading a lot of the April economic data coming out earlier this week. Just to highlight a couple of things. Retail sales, which was also featured in one of your graphs, in April we started shrinking 11% year on year. That's a pretty significant number. And anecdotally, we've also heard that not a single car was sold in April in Shanghai, where a very significant lockdown is happening. And Shanghai is a city of upwards of 25 million people, so that's a pretty clear indicator of some of the impact we're already seeing on the consumption side. And then on the output side, we see factory production in China falling 2.9%, almost 3%, also year on year. And specifically the Yangtze River Delta, which includes Shanghai, and it's one of the most economically dynamic regions in China. In April, we saw that falling by 14% versus the 3% at the national level. So again, very significant development. I think all of that, the April data we've seen, it'll likely, like you said, weigh on this year's growth, which has a 5.5 target, at least at the beginning of the year. We'll see what that happens. And I think perhaps just to add on to what you said, thinking about the international spillover of the developments in China, certainly on the supply side, you've mentioned that, China in a lot of ways, it's a factory of the world, a lot of big ports, and certainly we're expecting supply side bottlenecks to potentially worsen, and a lot of delays happening. And I think that obviously will add to the inflationary pressure we already see on a global level. And something I want to add perhaps is, on the demand side, we also see, in my intro, you also mentioned that, China, Latin America, the connections between China and Latin America is something I spent quite a lot of time focusing on. And I think the slowdown in Chinese demand is something that South American commodity exporters needs to be thinking about. There should be a lag, of course, but something when you think about, we know that a lot of the major commodity exporters in South America, first of all, China is their biggest trading partner. And in a way, their growth and business cycles are much more correlated, for example, with the Chinese economy, with the pace and rhythm of the Chinese economy, than in some cases with the US economy. So certainly, I think this is something that the commodity exporters serving the Chinese market need to think about, especially with slowdown demand on China. Since the conversation so far, I think most people are more focused more on the supply side impact from coming out of China. And then inflation is an interesting thing. I was actually looking at the chart you showed later on about inflation in major emerging markets economies. I would say that China so far, since the beginning of the pandemic, has been an outlier, a global outlier, especially when we look at the top 10, the 10 largest economies in the world. We haven't seen, prices have been relatively stable in China, but now with the most recent Omicron outbreak, and I think some relative shortages we've seen in China, we're seeing, at least in some parts of China in this context, some inflation happening as well. My hope and my assessment at this point is that this is probably temporary and not exactly broad-based, but if China being the only outlier and not having significant inflationary problems is also starting to suffer from that, that certainly adds into the global inflationary picture that we're seeing. So that's perhaps another additional point I'll add on the inflation story. And lastly, perhaps related to China, is also just thinking through, in this context of perfect storm, as you mentioned, how different regions can be impacted differently through the different simultaneous shock we see. I think when the war happened in Ukraine, some of the initial, we see a lot of downward revisions when it comes to GDP growth across the board, but we saw parts of Asia being less affected by some of these impacts. But I think now they're at the front line of what might be happening in China, depending on the duration of it, depending on the intensity of it. So I think it's a reminder that this is certainly not the moment to be complacent, potentially even with the shocks we're dealing at this moment and the new ones that could be coming down the road. So that's something I'll mention on China. And Otaviano, feel free to jump in any moment to interrupt me and ask questions and make comments. And now I'll probably have a couple comments turning back to you as well, based on this presentation and the previous work you've done. Next up, just to quickly comment on the food price issues, such an important issue as you highlighted during the slides. I think one thing to emphasize, perhaps two things to emphasize here, is a lot of major crops were having bad harvests in some parts of the world even before this Russian-Ukraine shock we're seeing. And I think the drought issues and these climate events are no longer one-off. They're, if anything, unfortunately, they're going to be increasingly frequent. So it's almost reasonable to think about them as part of the new normal and something that we have to deal with in a more regular basis. That's one thing. I'm not going to repeat too much about what you said about just the importance of Russia and Ukraine and the global agricultural market in so many ways. But I do want to double down on the point of fertilizer, which you dedicated slides to. I think that's a critically important topic, and that really impacts food production and food prices in other exporters around the world, and certainly Brazil is one of them. And if I'm not mistaken, Brazil is one of, if not the most important fertilizer importer and an agricultural powerhouse. So something that we should definitely keep in mind. And perhaps the last point I want to say on the food front is also something you have touched on, which is trade restrictions. I see this as continue to grow. A lot of countries are, I think, in their own way, reasonably making attempts to stabilize domestic prices, secure local supply of food. But certainly with trade restrictions happening, this is a snowballing effect. I think we'll see even more volatility and perhaps price swings in the global food markets, and that's not a good thing for the price shock that we're seeing at this moment. And then perhaps moving on a little bit more to broader inflation-related topics, and I'd love to get your thought on some of these issues. It's such an important issue. You've written so much about it, Otaviano. And I think, like the food price issue I mentioned earlier, I think one important point I want to make from the top is this is not something that started with Russia and Ukraine, where you saw inflationary pressure happening before the war, and perhaps less so in the advanced economies. But even the second half of last year, we saw inflation picking up in some major emerging markets economies in Peru, in Chile, in Brazil, and in Russia, for example. And central banks in these countries had already had to take actions. So I think what we saw is certainly a doubling down of some of the things we see last year in some of the emerging markets. And in a very generalized way, I think it's a similar fundamental monetary policy dilemma that's faced by a lot of advanced economies right now. As you correctly point out, you want to battle inflation, but you want to suppress growth. You want to maintain and safeguard an ongoing recovery, and financial stability is an important part of that. But you also don't want to give into to inflationary pressure. And the ECB example you gave, I think, is a very good example how a lot of this is a continuous evolution, and we'll see how this continues to evolve. And just this morning, I think we saw the UK inflation data coming out, right? I mean, it's April data, 9% year on year, 40-year hike. And similarly in the US, I think the March data was about 8%, 9%, also 40-year high remaining at a very significant level. And indeed, if central banks have different priorities, if they determine that inflation is the main thing they want to target, we'll probably see some more aggressive and accelerated rate hikes and the monetary tightening, as you mentioned. I think the signaling and the potential impact for emerging markets, that's something that we should definitely discuss. And the second part of the inflation story is also something you pointed to, which is, what's causing inflation, which is, of course, an open discussion. But, people like Jason Furman have long argued that, like you said, this is not just a supply side issue. If you look at port activities, especially during the pandemic and even now, we see port activities at record levels. So it's not a matter of the supply hasn't been growing or supply is still at pre-pandemic level. It's just that supply has not been growing as fast enough to keep up with the demand. And part of that is also, as you mentioned, I think some of the policy stimulus and support in advanced economies, and also how that's caused, due to the pandemic as well, caused a global shift, not just the increase in demand, but also shift in demand from services to goods. So we'll see that. And yesterday I was just reading, I think the Bloomberg supply line newsletter, and it seems like the most recent data in Los Angeles and Long Beach, for example, two of the major ports in the U.S., it seems like there's no slowdown on the demand side, despite what we see as a potential withdrawing the fiscal support and also monetary tightening in advanced economies. So I think, at least on the demand side, that's something still we need to worry about a little bit, and it's a reason for inflation to continue to persist. On the supply side, not to repeat too much, I think everything you've discussed so far, we're going to see some bottlenecks going forward. And perhaps then throw in a question back at you, Otaviano, which you had a section dedicated to stagflation. You've written about it, and Ben Bernanke yesterday came out, saying that he sees this as a possibility, within some period in the next 2 or 3 years, some form of stagflation, a combination of low growth and high inflation happening, even in this country. I'd love to get your latest thought on all of that with Ukraine happening. And perhaps the second question I'd love to ask you, related to that, is also last year, I remember you written about a piece about taper tantrum, and we're already anticipating some of the rate hike actions in advanced economies. And I think the assessment at that point was that, at least among a couple of things, developing countries are in a much better place and much better prepared. A lot of them, at least compared to, I would say, 9 years ago, a lot of them has smaller or much less significant, twin deficits, less dollar denominated debt. But also at that point, I think you also pointed out that vaccination and even max vaccination across the world there's basically the risks are elsewhere, the major risks are elsewhere. I wonder what your latest assessment is, given the current environment we're in and an even more real likelihood of some sort of rate hike happening. Certainly love to hear your thought on that. And just to wrap up, I think my final comment before turning it back to you, and love to hear your thoughts on the two questions I mentioned earlier, is I think, it's sometimes, at least in the media, people tend to focus on who are the winners and losers with Ukraine, economically, politically, what's happening around the world. And I would say that this is a very sad situation, what's happening. It's hard to think, even at the global level, who are some of the real winners, right? I mean, I mentioned earlier that even before the war started, it seems like, some Asian economies were doing relatively well, but now with what's happening in Asia, that calculus is changing a little bit. And, I'll use another example to reinforce this point about complacency not being a good moment right now. Is, one of the major winners that we thought about coming out of Ukraine and Russia was Brazil and some of the South American grain exporters. We had totally thought that this would be a relatively positive terms of trade shock for Argentina, for Brazil. They'll probably be able to capitalize on some of the trade diversion gains. But for reasons you mentioned, I don't think that's necessarily the scenario we're looking at it, at least not to the extent that we had anticipated. The droughts in Brazil and the southern cone are impacting harvest this year. I think there's a question about how significantly, countries can really step in to fill in the void that Russia and Ukraine are leaving out. And then the fertilizer question, once again, it's such an important question about how competitive some of the agricultural products and exports coming out of our region at a global level, something certainly to think about. And the final point, I think, broad-based inflation, which we're seeing across different emerging market economies and certainly advanced economies, there's a social element to that, right? I mean, there's in addition to the fact that you mentioned that inflation is very regressive, it impacts disproportionately poorer households, poorer countries, because they spend a higher percentage of their income on fuel, on food, especially in the countries that are having, political election seasons coming up. I think we've seen repeatedly in history that, rising prices have social implications, potentially causing social unrest. So certainly something that we can think about. I'll stop there, Otaviano. Thanks again for the invitation. Sorry for dragging on with this very long response, but you made so many excellent points. I thought it would only do it justice to at least comment on picking up on some of them.